All right, listen to me. The US dollar is falling and it will continue to fall, okay? The yields continue to rise and the amount of debt continue to left there to be paid. So the yields are going every single time higher and higher, especially the 10 years, it's flirting with the 5% mark. And I would say that the US dollar is under pressure again. That sort of move up, and I've mentioned that many, many times. If you go back a few videos, you will say that I've been mentioning that little move up, it's literally spike. It's just a little breathe for the market to be able to continue to go back below 100, and that's where we're trading at. It's not even worth $1 anymore. It's 99 cents, right? So it's struggling because of a few things. So the first thing is the concern about the mount over the fiscal stability and the renewed trade tensions that did spark on the G7 meeting on Alberta, that is on USA. So that's the main scenario that we're trading at the moment. And of course, we look at gold. Market is sort of taking the risk off. Market is sort of stepping back. And when I say market, I don't say the actual candles. I'm talking about the market participants. And when I say market participants, I'm talking about you. I'm talking about me. I'm talking about your friends that trade. I'm talking about big institutions, pension funds, hedge funds, fund managers, banks, market makers, ETFs, all of those into one single ecosystem. These are the people that actually move the market with, of course, the central banks, with of course, the monetary policy, and etc. So they are all stepping back. And when I mean stepping back, they are looking at the risk and reassessing, and they are looking at it as a market noise. When I say market noise, it's basically there's too many volatility, but there's no actual direction. Okay, there's no actionable insight to take that into a direction. So for this reason, most likely what we will be able to see is continuation of ups and downs into yields, into US dollars, into euros, into Australian dollars, etc. But most likely we will continue to see the volatility sparked up. And plus, we will continue to see gold rallying. I remember when I say that, yes, gold will come back down, gold did that. And now gold will go up, gold is going up. So, these are the types of information you're missing if you're not into the Telegram, if you're not into watching these videos every single day, if you're not subscribing to the channel, if you're not leaving a thumbs up here, and put the bell notifications up into when you subscribe. So every time we post a new video, you don't miss it. So then YouTube will send you a notification for you saying that ACY Securities just posted a video. And it's working because for me, I always get the notification. So do that, and that will help you and that will help us as well. Now, moving with that, as I say, gold is going up, and that shows to me that this is a risk-on market, risk-off market at the moment. With that, we have Japanese yen, CHF, as well as Canadian dollar strengthening a little bit, okay? So we have the Japanese yen as a safe haven. They're gaining the ground at the moment. So especially the yen and the Swiss franc, they're leading for this week, okay? Since Tuesday, after Tuesday, they have been the ones that have been the most strongest into this week. So US dollar, Japanese yen is sliding while the Japanese government bonds yield is rising. So that suggests to us that the pressure on the Bank of Japan ahead of its June policy review may be, a little bit of a hawkishness tone. Maybe, I'm not saying that they will hike. That this is what Kuroda has been saying, that they don't think it's a time to hike anymore, but if there is options, he will do. But at the moment, no options, in my opinion. But anyway, so the CHF saw a sharp 140 plus pip, so 1,400 points up into US dollar CHF. So these are the types of trades you should be looking at: CHF longs, Japanese yen longs, euro longs, US dollar shorts, gold longs for this next week most likely. And yes, it's a crazy market. We've seen We've seen last week risk on, and we see this week risk off. So it's a little bit of a, I don't know what's going to happen. So I hope you guys enjoyed today's video, and don't forget to leave a thumbs up and subscribe to the channel. And also tonight, well, this afternoon, we're going to be having the market webinar. So from 4 to 5 p.m. Sydney time, you can join me live and answer and ask me any questions you would like to, and I will be able to have a, more like a personal chat with everyone there. So to get the link access to the webinar, it's easy. You just go into the description and you will find the link to the Telegram. So you join the Telegram, because at 4 p.m. I will send the link into the Telegram, and then you can join me live onto Zoom. Guys, thank you so much. I hope to see you tonight or this afternoon, depends where your time zone is. But besides that, have a great rest of the week, and I'll chat to you today, this afternoon, or tomorrow. Thank you. Bye-bye.